Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. Today, I'm talking about venture capital trusts, known as VCTs. VCTs invest in small, ambitious companies which can become household names in the future, helping to create jobs and economic growth. These young companies are high risk, so the government offers generous tax breaks to benefit investors. It's recently been a challenging environment for VCTs, with the average VCT down 5% over the last year. But over the longer term, VCTs have performed well, up 22% and 85% over the last 5 and 10 years, respectively. So let's find out what is the outlook for VCTs and how are their managers investing in this difficult economic environment. Today, I'm delighted to be joined by 3 VCT investment company managers. Andrew Bloxam, Managing Director of Foresight Group, which manages the Foresight Technology VCT. Ian McLennan, Partner of TriplePoint, which manages TriplePoint Venture VCT. And Nick Pillow, Senior Venture Manager of Blackfinch, which manages Blackfinch Spring VCT. Well, welcome to our managers and on to the questions. Now, how has VCT fundraising been in this challenging environment? I'm going to ask that first question to Ian.
Thanks, Annabel. Well, I think there have been some headlines recently about fundraising for VCTs being down year on year, but you need to remember that we've just had 2 fantastic boom years for fundraising in VCTs. They've been tremendously popular. So I think down a bit from that would still qualify as a good year. But we expect the end of the tax year, which is the most important fundraising period, to remain robust for VCTs. And we are finding that across the country, there's still a great deal of interest in VCTs, not just because of the tax reliefs, but the exposure to UK growth companies. People have found some of the pension changes in recent years perplexing, and VCTs might be one way for them to manage their way through that. And of course, we recently had the renewing of the lifetime of the VCT and EIS rules instead of with the sunset clause being extended by another 10 years. So that, we think, has provided quite a solid bedrock of confidence for the sector going forward into the end of the tax year.
Thanks, Ian. Yeah, that's really encouraging. We now have it confirmed that the VCTs are going to continue till 2035, and those upfront tax reliefs will be in place until then. Very reassuring for investors. Andrew, how are you finding the fundraising environment?
Well, like Ian said, this investment products are driven by the attractiveness of the tax reliefs, and I've seen quotes in the press that mention the average UK household has the highest tax burden since the 60s. I think some even say that World War II. So it makes these products more attractive than usual, and that probably is why we've seen the high years of 2022, 2023. In our personal experience, the Foresight VCTs, despite the market, I've seen some stats saying might be down 25% as at middle of December. Our funds were maybe bucking that trend. Now there's an indicator. We've got the Foresight Technology VCT strategy is quite young in the market. The generalist VCTs have been around a long time, but gradually performing better and better. And maybe that's why inflows have been pretty strong, which is really encouraging.
Well, that is good news. It's seeing lots of demand. Nick, how's it going for you?
A bit like Andrew, we're quite a new VCT, still very much growing, and we are a little up actually from last year so far, and seeing a lot of interest whenever we go out talking to potential investors and financial advisors. There's always very strong interest in what we're doing and in VCTs in general. So following two record years, is it going to be quite so good? Don't know, but it's still looking very, very strong and positive.
Okay, well, that is encouraging. Now, it's been a difficult environment. How is the trading environment for your portfolio companies? And I'm going to ask that question to Nick.
So for portfolio companies, the economic environment can make quite a difference depending on what they're doing. And certainly some of our companies have had to work harder at sales. Sales cycles are longer. But a lot of our companies, and I think this is true for many VCTs, are investing in innovative companies that are really delivering some new value to their customers. And actually, in this climate, potential customers are having to look very closely at everything they're doing, finding new efficiencies or extra value, and often finding that in exactly the younger, innovative companies that we are backing. So we are seeing strong growth still in quite a few of the companies, which is very encouraging, sort of powering through the more difficult climate.
That is good news. How about you, Ian? Are you seeing similar with your portfolio companies?
Yes, I think for our companies, probably the same for the group, but definitely for ours, they're relatively early stage businesses, and really the much more important thing for them is the success of their own product relative to any competition there may be, rather than the macroeconomy. One way that the macroeconomy and interest rates can affect startups is by the environment for fundraising. Clearly, these are growth businesses. They want to be raising more capital to invest, and that definitely became a bit more challenging for some in the last 18 months as interest rates went up. But I think even they are beginning to see in the portfolio a bit more activity of companies that maybe stretched out runway for a long way now are beginning to raise money again, seeing a bit more signs of M&A, etc. So, overall, I think we're probably through the worst, fingers crossed.
That is encouraging. I do think the last couple of months of 2023, we did see a bit of an uplift in terms of activity and quite a big change in sentiment. Andrew, how are you finding your portfolio companies at the moment?
Certainly, if you looked into the portfolio, we're seeing similar situations to what Ian and Nick have described for certain companies. I just build on that by saying we're often investing into companies developing advanced technology. So some of those companies are still in the R&D phase. So they've arguably had less to lose when there's been shocks to sales. They didn't have those sales to lose. And then building on a point that Nick made, some companies can really benefit from drivers in the market that go beyond macroeconomic challenges. I'll give you an example. We've got a company called Rovco. It's developing advanced robotics to dramatically improve the efficiency of building offshore wind turbines and also surveying those turbines once they're built. That's a huge growing problem that the world needs to solve, and their technology is in demand because of that. So they're actually benefiting from what's gone on over the last couple of years.
Great. So, Andrew, you just explained a little bit about the types of companies you invest in. Can you tell us a bit more about them? What sort of technology, what sort of companies?
Yeah. So we're looking at early stage companies in the UK. They've often originated out of the top universities. They're often combining one or more advanced technologies to try and tackle some of the world's biggest challenges that we're facing right now. And they often include hardware technology or industrial software. And we're looking for the most scalable companies in this space. So we're looking for large market opportunities, teams with the right technical but also commercial experience, so they understand how to not just invent something new, but they know how to build a profitable company around it. And then we'll use our network of regional offices at Foresight to find these sort of companies all over the UK, and then we'll use the expertise of our technical partner, WAE, to help screen these companies for the best ideas and also help them prevent problems as they scale up.
Right, very interesting sorts of companies. How about you, Ian? What are you investing in?
Well, we focus at Annabelle on business-to-business software companies. So one of the reasons for that is that we've looked at the amount of M&A that goes on in smaller companies in the UK, and there's a lot more activity in terms of exits for B2B companies than for consumer-ended companies. And obviously, of course, when we invest, ultimately long-term, we are aiming that the business can exit sometimes to an IPO, but realistically, more often it will be to another larger business, and that's where we see the most activity. And then within that, the one thing I'd pick out, it's not particularly one sector within that, but we've been focusing on companies that, although it may not be their core business, they have a data gathering angle, on the view that companies that have data involved in the core business ultimately will be the ones that are most able to exploit machine learning or AI, artificial intelligence, in order to create add-ons to their products later on. So one example of both of those would be Modo, which is a software company originally from Birmingham, which has a platform which allows owners of industrial scale batteries, so batteries that are connected into the national grid for backup power, allows them to monitor and rate the performance of their batteries and compare that to their competitors. So they've got an essential product for their business customers, but they also are on top of all the data in the sector, which long term will create new opportunities, we think.
Well, that does make a lot of sense, that data gathering, data is, kind of so fundamental. And, you think how you can use technology with that. That really sounds very interesting, Ian. Nick, what types of companies are you investing in?
So we invest in technology-enabled businesses, but then across a wide set of sectors. And we are very much focusing on broadening out that diversification so that we minimize the risks of whatever the world might throw at us next that would affect one sector. But equally, getting exposure to the sectors that are going to do very well. We always want to see evidence that the company is succeeding, that they've established the basics, they're able to sell, that customers want their product, and then our money is used to help scale it up, to grow it further. But as I say, fundamentally, it's about companies with that element in there. Everything from fintech, financial technology, to HR software, to safety technology, all these types of things all mixed together. With that high growth potential.
Yeah, well, there's a high technology preponderance between you, I have to say, in terms of the companies you invest in. I'm thinking about the economic and social benefits that VCTs provide. Ian, would you like to tell us a bit more about that?
Well, for me, I think the main economic social benefit of VCTs is just from what you've just said, Annabelle, technology, the extent to which the VCT industry is backing British technology and innovation, which of course is ultimately absolutely key to productivity growth and incomes in this country. And I think also, I think it was the AIC that produced the data that in 2022, the VCT sector backed 350 British companies. And as we know, in the UK, we don't have the tech giants, the Magnificent Seven or whatever they're called these days, that the US benefits from. So our innovation has to kind of percolate up a lot more bottom up. So for me, that's the main thing. Oh, of course, there are sectors that we invest in which have positive social spin-offs or even direct social spin-offs. We invested in a company called Fertifa last year, which is bringing software to help employees of larger companies deal with fertility issues or menopause issues or whatever. Those are some of the ways, Annabelle.
Yeah, well, we really do need to build our technology winners of the future. And I totally agree with you. That was, that's so important. I'm so pleased that VCTs are part of that. Nick, how about you? What about the economic and social benefits?
Yeah, well, as Ian says, the most direct benefit is the jobs that are created in the UK from these high tech companies, and these are high value jobs, not low level ones. And I'm sure we could all come up with our stats on how many jobs have been created directly in our companies. But I think it's also important to remember that even when a company has been sold by a VCT, if you've got the exit for the benefit of the investors, that growth in jobs is still continuing. I was part of 2 startup companies that got taken over, and the acquirers carried on hiring because of that technology and because of that business they'd bought even after that. But again, as Ian says, that there are direct social benefits as well. We invested in a company called Culture Shift that tackles workplace bullying and harassment. Direct social benefit as well as the commercial return to shareholders. Plenty of examples like that.
Yeah, well, that is very reassuring to hear those benefits. Andrew, I mean, you've got a very specific type of technology you're investing in. I'm sure there's some very specific benefits.
Yeah, and I'll build on what Ian and Nick have said. It's bringing new technology to market is incredibly important, and bringing that new technology to market creates a lot of jobs in the process and creates the STEM jobs. And we invest in companies all over the country, so we're creating jobs all over the country. We're investing in underrepresented founders. We're solving what are pretty important problems, and in a range of different technologies. So I'll give you a couple of examples. We backed a company that spun out of the University of Loughborough. It's developing a flood early warning system. So it originally developed a sophisticated flood modelling platform to route ambulances out when floods arose, but it worked out that it could use that for an early warning system with a range of sensors and help people take preventative action before floods, to avoid unnecessary flood damage. And then we backed another company that came out of the University of West England near Bristol, and it's developing a low-cost bionic arm using 3D printing and 3D scanning. And that has direct benefits to all of its users from an inclusivity perspective. And I think they hold the record for providing a bionic arm to the youngest patient in the UK and the US. And these companies brought their technology to market with investment from VCTs.
Yeah, absolutely practical help to people when it was raining so much. And that flood technology was what we needed around here, quite honestly, to help us with the floods. And also bionic arm, isn't that incredible? Transforming somebody's life. My final question here is, obviously we've got an election coming up, and would Labour winning make any difference to VCTs? And I'm going to ask that question first to Andrew.
Thanks. Well, I hope not. But VCTs have grown over years, and they've grown over successive governments of different colour. And I think we've seen there's been lots of discussion, and the results have always been improvements in the VCTs and growth in the VCTs so far. So I'm hopeful that there'll be no changes, or to the extent that there are changes, they'll be beneficial to the VCT regime, not negative.
Yes. Nick, what do you think about that? Would it make any difference?
I doubt it, to be honest. I mean, we've seen the current government extending this sunset clause for VCTs for another 10 years, but it was Labour who was writing to them before, urging them to do just that. So I think certainly with the current Labour leadership, I would be very surprised if there's any challenge to VCTs.
Yeah, and Ian, what's your perspective on that?
Well, as the one with the grey hairs, I've been around for a while and seen, and there's always for over 30 years, there's been continual debate about how government should support small companies and startups in the UK. In fact, it goes back way beyond that. And as Andy said, VCTs have been around for over 25 years through both sorts of governments. So I think they have a sort of solid background. And looking at Labour's proposed policies, they are very much emphasising what I can see economic growth. And they did commission a study into investment innovation in the UK, not just VCT level, but also larger institutional level, and seemed to be somewhat similar to the current government in terms of wanting to encourage more investment in innovation.
Well, let's hope whatever colour the next government is, I think today you can see the benefits of VCTs, the economic benefits, the social benefits, the jobs they create. They're supporting this innovative technology. And clearly these are high-risk companies, and therefore, the government needs to offer those tax benefits to make it attractive for investors to invest. But it's clear that those companies really need this support. I'd like to thank our managers very much for joining us today. It's been great to hear their views on VCTs and their investments. I'd like to emphasise we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you're in any doubt, you should talk to a financial advisor. Thanks so much for watching.